Hi, join us next where we'll be talking about position management, the new year, how to make money as we start out this January, what's been happening in the VIX term structure, and more on the Short Vol Show Live coming up right now.
You're watching Famous Dave on YouTube.
Good morning from Cape Cod, home of the Pilgrims in Massachusetts, and we are in a new year. It's a fresh start. The accounts are wiped clean. You've got a new chance to either be profitable or fall on your face. And it's time, as always, to reevaluate your positions. Think about what you could be doing better. And if stuff's working, maybe continue with that and really focus in on how we can make money in this new year. If you haven't met me before, my name is David Lincoln Bechtold. My background is I was a floor trader in Chicago for many years. You can see this is what my badge used to look like. Now, the trading floor was it was kind of like it was almost like a high school or some sort of group of men who are, very childish and whatnot. I just everybody has nicknames there. It's kind of like the mob or something. I picked this. You had to pick a 3-letter acronym. It was called to trade with, and you had to pass these tests, and they would investigate you. For example, they would have a private investigator investigate you. So they would say, okay, well, 10 years ago, you put on your resume that you worked at McDonald's from 1982 to 83. And then on another resume, you said you worked at McDonald's from 83 to 84. Which was it? You were obviously lying at one point. Another thing they made me do, I had some parking ticket I owed $400 on a parking ticket, and I had to promise them I would get that resolved before I was able to go on the seat, it's called. Having a trading badge back then, you had to, it was kind of like a taxi medallion. You had to lease a seat or own a seat, and the price of a seat changed all the time. It was anywhere from and you had to pay a monthly amount, which represented a certain percentage of the value of the seat. So, for example, while I was trading, which was in the late 90s, early 2000s, the price of just to stand there and get this badge was somewhere between $3,000 and $11,000 a month. And they would investigate you beforehand. And well, there were different types of badges. This is a SIBO badge. I did have a Board of Trade badge for a while, and Board of Trade was even more elaborate process where you kind of had to know about soybeans and soy meal and a bunch of commodities stuff and agricultural stuff, which I had never really been exposed to. Anyways, and then you'd have to go in front of this committee with a suit on, and I know it's not a big deal having a suit on, but you'd have to go in front of this committee and do all this stuff. And finally, once you'd been approved, they'd make you sign the book. And once you sign the book, then you could tell them your ideas of what you thought you might want for your 3-letter acronym. And it had to be somewhat appropriate. You couldn't have something that was sort of vulgar or obnoxious. Kind of like, I guess, a custom license plate would be. But someone had like BUD, Bud, and another guy had Keg. People had sort of drug-related references that were kind of like sort of opaque drug-related references like snow or something like that. But anyways, mine was due. Back then, I was one of a bunch of people who were rabid fans of the Grateful Dead rock band, and Morning Dew was a song that they played. They didn't write it, but they played it a lot, and so I got due. I was trying to get LLR for another song of theirs called Looks Like Rain. My other friend Jason got NFA for Not Fade Away. So there were two of us at least that had Grateful Dead references, and And so having this acronym sort of followed me around the floor. People would call me Dewey, and that became my nickname. And it was funny because it kind of followed me off the trading floor, and actually in Chicago, in the, I don't know, not the streets, but in the projects. So I'm not going to talk about why I was in the projects, but people knew my name Dewey in the projects even. Anyway, back to trading. So this channel is about the VIX and volatility. When I was a trader in Chicago, I did teach. I helped with the exchange, teaching people about pit trading and options trading. Members of the public would come into the floor, and we would do a mock trading session. If you watch financial media, you might have seen the Nigerian brothers and some others, Rick Santelli. There's a bunch of names that were down there kind of in the area with us who, and some of them helped try to educate the public as well about trading. But this channel focuses specifically on the VIX and VIX products. And the VIX has become a bigger and bigger thing as of late in the markets. In fact, you hear it talked about all the time on TV. It didn't used to be that way. The VIX has really come to prominence in the last few years as a measure. And essentially, the VIX is a measure of how much the market overall is moving around at a time. People call it the fear gauge because it tends to go higher when people are afraid and the markets start to move more and more. But it's basically a measure of options prices in the SPX, the S&P 500 or index. There's another symbol, VXN, which represents the volatility of the NASDAQ. And so what I like to do is I have a position in the VIX, and I'm pretty transparent with it. If you look up behind me on the screen here, you can see that the P&L for this position is posted. Now, it's not like a huge dollar value position, but it's just supposed to be an example of how someone might trade. And the hope is that you can not, I don't expect people to follow what I'm doing. I'm not some sort of guru or something, but the hope is just that you can see my thought process and you can see the execution of trading, how you actually acquire a financial product or transfer between owning one financial product and another, how the actual nuts and bolts of trading happen. That's sort of my focus with this channel, is to give you an experience of the way one guy would manage an options position. It happens to be in the VIX. I like to talk a lot about all the factors that go into making decisions as a trader. And the product that I mostly trade is VXX right now, which is it is a volatility ETN, exchange traded note is what that's called, and it's basically a product that is based on the first 2 months VIX futures. It tries to model 30 days out in the VIX. So what it does is it follows an index that is based on a sort of a blend of two VIX futures, the front month and the second month. There's one point in the month where the front month is exactly 30 days till expiration, and you only need to follow one future, but the next day, futures all expire. So as time goes by, you need to switch which futures you're using in VXX, because one of them expires and is gone, and then it's always every day it's rebalancing and rolling forward, and this has very tangible effects on the value of VXX. So if you look at a chart of VXX, you're actually seeing a patchwork of different futures that combine to make this number. So the futures, if you looked at VXX a year ago, it's actually completely different futures than are right now. And when you've got two futures that add up to a product, it's very important to figure out the relationship between those two futures, because they're not both going to be the same price. In general, the front month future the one that's closer to expiring is going to be cheaper than the second month future. And let me pull up a chart for you here. Most people that trade the VIX will look at some sort of relationship between futures called the VIX term structure. There's a website that's pretty popular that people go to called Vix Central, made by this computer program named Eli Mintz. And there is a relationship between futures. So most VIX products, UVXY, VXX, SVXY, are based on these first two futures. And if this is too basic for you, I just hang with me here because I want to kind of include people from different levels. Right now, we are about 1 week before the futures expirations. Thus, when we look at the chart here, which I will get out of the way again, the VXX, UVXY, etc., are based on almost entirely the February future. Now, the January future only has a week left to go. So if I were to get my little paintbrush out here, there we go. So when we see on the bottom of this chart here, we see January, February. That's expiration. It's not the actual month. Expiration happens, I believe, on the third week of the month. So if we were to plot where we are moving forward in time here, we're about 3/4 of the way through. So imagine that's 3/4 of the way through. I think I drew it about halfway, but imagine it's a little over to the right. That is kind of where we are in the curve right now. So UVXY, VXX are based on a mix of futures that's around 25. So let's say that's kind of the average. So what that means is at this moment in time, if we look at the price of VXX, VXX is 1675. If we look at 1675, that represents a future average of 25 in VIX futures, right? So 1675 equals a futures value of 25. As time goes by, due to decay, this is going to change. So in a couple months, if things kind of stay the way they were going, a futures value of 25 is going to represent a VXX of a somewhat lesser number. So instead of 1675, a 25 in the futures might represent maybe a 15 VXX as time goes by. And we can kind of start to figure out the way that the number that it will represent by doing a little sort of basic math here. If we look at this VIX Central chart once again, on the bottom here, we can see going across the page, it says 1, 2, 3, etc. This first number 1, it says 859. That is it describes the relationship between these two futures. It describes the slope of this curve, 8%, and then you see this 2 underneath. That 2 means that there's a 2-point difference between these two futures, and 8% describes this is going to tell you that if the VIX stays in the same price, or if these futures stay in exactly the same price as they are now, then over the next month, VXX will decay by 8%. So if we've got a VXX, let's do, for simple math, let's say it's 17 right now. So if we take a VXX of 17 and we multiply that by 0.08, we get 136. So over the course of a month, a 25 that we calculated, this was maybe an average of 25 in the futures right now. Over the course of a month, to 25 in the futures, instead of representing 1675, it's going to be 1675 minus 136. Here's my terrible writing with my mouse. 136 So what have we got? So we've got 1539. So if the futures stay right where they are in a month, VXX, instead of being worth 1675, will be worth 1539. Now, that might not sound like a lot, but over time, this is decaying pretty steadily. Now, of course, these futures are going to move around. They're not going to be exactly where they are next month. However, this decay continues on. Maybe these futures will be a half a point higher. Maybe they'll be a half a point lower. But either way, this decay is continuing to move forward for us. So, it would seem, well, it's obvious we just somehow get short VXX and it goes down and you make money. And that can be true for periods of time. However, it doesn't always go down. If some bad news hits the market, then we could see these futures move higher. And even though the stuff's slowly decaying, the shock of a down move in the market could have much bigger effect on VXX than the slow decay. This decay stuff happens over a long period of time. But the immediate effects of the futures just moving around day to day based on what the market is doing has a bigger effect day to day. And what we've really found over the last couple months, if you've been following this channel, is that the position that I've had on, which is to be short VXX by buying puts far out in time, really just hasn't worked. It's like if you were looking for the most exciting YouTube channel as far as trading goes, this hasn't been the one. It's been pretty boring. If we look at a chart of VXX here, in fact, this is, let's take a look at this one here. Let me see if I can get a good perspective. If you look at a chart of VXX over the last while, it really has not been a lot going on. This is a chart of 20 days. We haven't made any progress down in 20 days, right? And so the position that I've had on, it costs $30 a day to have it on, right? And we've made no progress. So we're just basically bleeding money every day, and not, if we had progress down to offset the cost of this position, then it would be working. But right now, it just hasn't been working for like a long time. Let me go and change the time frame here to let's go to 90 days, okay? 90 days, same thing. If we go back out here to November 9th, we were 1827. So we're a little bit lower than November 9th. But if we go up here to November 30th, we were 1690, which we're basically 1690 now. So nothing has happened for 2 months. So it can get frustrating and boring. And the last thing you want when you have a YouTube channel is to be boring. But so we have to keep evaluating. Is this the right position to have on? Do I want to sit here and just slowly bleed? Is this going to work out? Because it hasn't worked out so far. And I have an inclination to switch the position into some sort of position that has less potential upside, but where you actually collect money as we sit going sideways. And you could do that by selling calls or selling call spreads. The other possibility is, and my thoughts on this position are I want to wait till the inauguration probably, and if we don't get a down move after the inauguration, then to change strategy, because clearly this position hasn't been working out. And when we all have limited amount of capital. You may have $10 million, you may have $300, but we're all limited in some way. And you want to obviously be using your capital in the wisest way possible. Obviously, having your money sit and not make anything, and in fact lose $30 a day for months at a time, is not the most productive way possible. I could have put money in Riot or one of these other stocks that's just been a high flyer and doubled or tripled it, and that would have been a better move in hindsight. But so that's kind of where we are with the position here, and this is the way trading is. I've always been a very sort of, my P&L has always been very volatile as a trader. I'd have 1 month where I make a ton of money and then nothing happens for a long period of time, or it's very good, then it's very bad. I've never been a very consistent money maker. But how my position works out isn't necessarily going to determine how your position works out. Like I said, I like to be an example for people and just kind of give you my thought process to help you develop your own thought process and your own way of doing things. And there is the opening bell. I'm not going to hold you for too much longer. I do have an interview, which I did last week, which I'm still working on editing. It should be out later, probably tomorrow, with Ilya. So that will be fun to put out. And I'm looking forward to that. And hopefully this will be a good year for you. Last year was not a good year for me P&L wise. That first hit that we had with the COVID really hurt me, and I never completely recovered from that. The year before was good, but here we have a new year, new opportunity, and let's see where we are right now. I don't think I'm up money right now. What does it say? Let's see. So this account I'm down $300 on the year so far. So let's turn that around and have a great year. And I hope you folks have a great year too. Starting out with this week, I would suggest reevaluate your positions and let's get it going for 2021. I'm going to hang with my puts. Right now I own VXX September puts still. If I look at the position here, it shows me short 1,000 deltas right now, meaning that every dollar VXX goes down, I make 1,000. Every dollar goes up, I lose 1,000. If I show you right here the position really quick before I let you go, you can see I'm long 75 of the Sep 10 puts, and I'm long 1 Jan 8 put in VXX. That's kind of where we are right now. Thanks for checking out the show today. It looks like I have a little green glow around me. And I will see you very shortly for the next edition of the Short Vol Show Live. Dazboff, yes, 9% contango, beautiful. Nice to see everybody. And we'll see you next time. Good luck.
You're watching Famous Dave.